All right, we are live.
Great. Good evening, everyone, and I'd like to welcome you to the Finance and Claims Committee meeting for today, Thursday, August 13th at 7:02 p.m. And we'll start with the roll call. So we have Councilmember Hooverman,
Present.
Councilmember Keegan.
Here.
Councilmember Theodoridis.
Here.
And Councilmember Burnett. So we currently, and Councilmember Sachinelli just joined. We're taking the roll call, Nick.
Yeah, I think I was I wasn't a panelist, so I was watching.
I just promoted him the panelist. I saw him under attendees. Yeah.
Okay.
Thank
All
you.
right. Great. So with that, we, as I mentioned, we have a quorum. Larry, at this time, if you could share the agenda, that would be great.
All right. I just had it up. 1 second here.
We have a fairly short agenda tonight, so we should not be too long. So hopefully everyone can see the agenda. Item 3, public participation. We did not have anyone write in any comments for today's meeting. Larry, is anyone waiting to speak?
No, there's no one waiting.
Okay, with that, I'll close public participation and we'll move right into item 4, which is approval of the minutes from the July 9th, 2020 regular meeting. Do I have a motion to approve the minutes?
Yeah, I'll
Now-
move that. Right.
Thank you. Councilmember Keegan moves the motion. Do we have any additions, deletions, or corrections to the minutes? I know I had one very minor, which was on the second page of the minutes. The very last paragraph, we should just add a number 9 to that paragraph, because we have item 8, which is to receive the Oak Hills Authority. Item 9 would be where Mr. Hooverman moved that authorization. And then on the next page, we have item 10, which is receive information on the tax relief program. So we just need to identify that motion as item number 9. Hearing and seeing no other changes to the minutes, I'll call for a roll call vote. Councilmember, and that's approving the minutes with the necessary corrections. So Councilmember Hooverman.
Aye.
Councilmember Keegan.
Yes.
Councilmember Sachinelli.
Aye.
Councilmember Theodoridis.
I abstain.
Okay. And Councilmember Burnett approves, so the minutes are passed. That moves us into item number, actually 5, 6, and 7, which our tax collector, Lisa B., will take us through those items, starting with the Claims Committee report.
Thank you. Good evening. Can you hear me all right? Yes? Okay. There is one special request on your claims tonight. It's a special request by virtue of the fact that it's in excess of $10,000. It's a real estate overpayment that we are still actually processing refund requests from that time period in December, a couple years back when they changed the federal income tax rules. And there was a rush to make payments in December, and then banks, escrow agents paid in January. So this is from the grand list of 2016. We are now collecting on the grand list of 2019, but this taxpayer overpaid and we need to refund their overpayment. It's in the end of your packet. It's for 11,449.11. The others are all just the usual motor vehicle credits and things of that nature that we are processing refunds for at this time of year. The vast majority of them are motor vehicles.
Okay.
But
Oh.
I need you to vote
Thank
on it. I don't know if you want to do one item at a time or.
Yes, we'll do one item at a time. So for the Claims Committee report, to receive the monthly Claims Committee report dated August 13th, 2020, do we have a motion on that item?
So moved.
That's Council Member Hooverman. Moves that item. So we'll now call for a roll call vote on approving the Claims Committee report. Councilmember Hooverman,
Aye.
Councilmember Keegan,
yes,
Councilmember Sacchinelli,
Aye.
Councilmember Theodoridis. Did we lose him? I don't see him on our screen anymore. And Councilmember Burnett is an aye. Oh, there he is. He's
No, that's John Kites is coming over.
George came back also. Councilmember Theodoridis, we were voting on the Claims Committee report.
Yes.
Okay, great. And Cheryl, for the minutes, please reflect that John Kites has joined the meeting. So that motion has passed. So we're moving on to item 6, which is the narrative on the tax collection. And just for the minutes, Cheryl, if you could reflect that our Chief Financial Officer, Henry Dakowitz, has also joined the meeting. Lisa, on to you.
Okay, thank you. For the spreadsheet for the month of July 2020, we have given you 2 spreadsheets, and I've given you one narrative that addresses them both. The reason why we're giving you 2 spreadsheets is we're basically reporting on 2 different fiscal years. So we're reporting on the new grant list that we are on, that we started collecting on in June of 2020, the 2019 grant list. But we're also giving you a wrap up on the end of the cycle on the 2018 grant list. And I'll start with that because if you recall last month, we were concerned because we had not yet, as of the end of June, reached our budgeted collection goal, which was very unusual for us. We usually do reach it, but due to COVID, we were short. And the CFO and I were optimistic that we would be able to achieve the goal, which was 98.6%, because the way that they do accounting for municipal taxes is on a modified accrual basis, which for us means they track our revenue for the 60 days following the close of the fiscal year. So that 60 days encompasses July and August. So as of the end of July, we're looking to see what we did with the addition of that 13th month in the fiscal year. And we are happy to report that we did achieve the collection rate that they had budgeted for us for last year. We are at 98.63%, which is in excess of the 98.6 that they budgeted. So that's really, really good news for you, particularly during COVID. So we were happy about that. We will also keep track of what we collect during August, so that's only going to go up. With regard to the new fiscal year, we really didn't know what to expect because we had given, as you recall, the council voted to extend the grace period until October 1st for our current installment. And we didn't know what to expect. But the good news is that a lot of people paid what we would consider an on-time payment. When I refer to on time, I mean by August 3rd, but they're obviously still on time until October. But we did actually pretty well, considering everything that's going on. We, as of the end of July, we had brought in 36.7%, which was down 7.5% from last July. And of course, August 3rd being the day everybody normally would pay at the end, a lot of payments came in the first week of August that are not even reflected in these numbers. So we won't really know where we stand, even in terms of that first week in August, until we do our August numbers at the end of this month. And a lot came in at the end. A lot came in at the end. So I think that that means a lot of our taxpayers did not take advantage of the extension, particularly with regard to real estate. Motor vehicle is another story. And we had spoken before any of COVID happened, about the fact that the state of Connecticut has extended the registration cycle for motor vehicles from 2 to 3 years. If you remember a couple years back, there were a lot of issues at the DMV with customer service, and they felt that one of the things to streamline their operations would be to have fewer people in the branches renewing their vehicles, and they made a longer registration cycle. And we knew at the time when they did that, that was going to impact tax collections at the municipal level, because there are a lot of our customers who do not pay their motor vehicle taxes until they need to register a car. So normally we would see them every 2 years. Now we're not going to see them until every 3. So even before COVID, we knew there was going to be a dip in motor vehicle collections. We didn't know how much. Now with the DMV being still closed to the public, basically, and so much being up in the air, our motor vehicle collections are really not good. But it's too early to tell how bad it's going to be. I'm just cautious about it, and I want you to be aware of it. It's my job to let you know when I see something that I don't like, and that's what I'm doing here. More good news instead of bad news. The tax sale that we have not yet been able to schedule, we have collected actually even more than I had in your written report. I had 75 properties paid in full, and it was about 2.8 million. That went up a little bit since I wrote the report, and we're at 78 paid in full. And we've collected 2.9 million on the sale that we started working on in November. And were it not for that sale, we would have had a pretty tough year. So that's good news. When the state of emergency is lifted, we will start working on the sale again, depending on what the administration thinks is appropriate. And probably that sale will be held maybe a year later than we had planned on it. So it would maybe be in July of 2021. Probably not before that. So that's the good news and the bad news. The other good news was our collection basically has been going pretty smoothly. Since I spoke with you the last time, they have allowed us to bring our full complement of our staff back into work. So all 7 of us are there. We're working physically distant. We're wearing masks and sanitizing and being careful. But we do have everybody back on board. So we're up to date with our work. We're up to date with our mail. We're up to date with all the other things that we normally do. And everything is okay. That window is open. It's open 9 to 4. We changed the hours a little bit, but we're just doing our best to keep things going, considering that 90% of your revenue comes from property taxes. And we're very cognizant of that. That's it.
Thank you, Lisa. Let me start by thanking you and your team for all that you've done through the pandemic and continuing to do, because as you stated, it's very important that we keep our cash register open, and the work that you have done truly reflects that, and the innovation that you and your team has brought forward by opening the window and all of those good things is very important. So thank you.
My pleasure. Thank you.
Two
pleasure.
questions. Yeah. Oh, thank you. Two questions. One, what the DMV, and thank you for pointing that out as a early warning. Is there anything we can do about that? We know it's a potential situation, but are there any steps we can take to minimize the impact of this, change from 2 years to 3 years? And
Yes. we can get boots, the booting, and do booting. And we may have to,
Booting? You mean actually like putting
booting
the
the car with a
the
boot.
yellow boots on the car?
Yeah, the parking authority uses them. There's some other municipalities that use them. I would have our state marshal put the boots on. But I would do it for high, similar the way we do with tax sale, where you look at high dollar amount accounts and accounts that go back of the furthest amount of time. So that's what we would look into. We've looked into it in the past, but we haven't done it, but we may have to. But that would be one thing that I would keep in mind. Another thing that we can do, if we know where an individual has their bank account, we can garnish their bank account. We can also garnish their wages without a court order because we have a warrant from the state. And we already do that. So we'll be doing it more for motor vehicle accounts. It's just a little bit of detective work to find out where people do their banking.
Hmm. And at what point would we, well, I'm sure you'll give us headlights as to,
Yes,
you know, if we need to get to that point. I mean, obviously, right now, during COVID, I don't think we would want to entertain booting any cars, but,
no, it's
That's-
just an idea for the future.
right, okay.
It's something, you asked me what I would do if things, you know, if our collections are tanking and we need to do something, that would be one of the first things I would look at. But I wouldn't do anything without getting everybody on board with the concept first.
Okay, great. Councilman Sachinelli and then Councilman Hooverman.
Lisa, are we comfortable? So part of the complications going back a few years ago was the DMV information was not accurate. We were sending bills to residents in Orange, Connecticut, Norwalk residents were receiving their bills in other cities and states. Are we, I mean, if we were going to take a recourse such as, you know, garnishing wages, are we comfortable with the DMV's data quality at this stage, or are we overstepping?
The issue that you're talking about was a DMV issue. It
Okay.
wasn't specific to Norwalk. It was an issue where the Department of Motor Vehicles did a transition in their computer system and something went wrong basically, and individuals were being taxed by municipalities where the vehicles should not have been taxed. And to the best of my understanding, that has been worked out. The kind of thing that we would be booting would be people who have every understanding that they owe their car taxes, but they're just not paying them. And I am not able to force them to pay until they need to register a vehicle. So they would probably have a historic record that I could look back for the last 15 years and see that the only time they come in to pay their taxes is when they need to register another vehicle. And if you think that's a problem and our motor vehicle collections are bad, it would become a policy decision that we were going to try to accelerate the collection, knowing that we weren't going to see these individuals until their registration came due, say in 18 months, and we would make a decision that that's too long to wait. We need the money now. That would be the kind of, we would do it on a case by case basis based on how far they owed back and how much they owe. And I'm not talking about somebody who owes $300 in car taxes. It would probably be somebody who owed 10 times that amount.
I see. Okay. Thank you.
Hey, Lisa, David Huvelman, thank you for everything that you're doing. You guys are really, you're taking on quite an interesting task during an interesting time, as they say. The question I have is the 98.63 that we've collected, that includes the tax sale money, correct?
That is correct.
So without the tax sale money, we're actually slightly behind that number. So it's in a way, it's fortuitous that all of this fell out in a tax sale year and we were able to collect that money moving forward. With regards to the tax sale, if we go back to business as usual and we're able to do that, do we just do you pick up where we left off? Are there other properties that then become added into this? Do we create a new, basically it's a new tax sale at that point?
At that point, it probably would be, yes, because we never even got to file our notices. So what we were doing, we were actually in what I would call pre-sale, because we know when we're having our tax sales in Norwalk because we always have them at the same time. We have them in July every 2 years. So when we know we're having a sale, we've gotten into the habit of, in the November before the sale, we start sending letters out to people who stand to be included in the sale, and we let them know early that the sale is coming to give them time to figure out how they're going to pay their taxes, to figure out how to arrange financing and things like that. We started doing that a couple years ago when we noticed it was becoming harder for people to get financing. So that's what we were doing, and it's in response to those letters that these folks have paid. So we've kept them aware of where we stand. We sent them another letter and said, the tax sale is on hold right now. We've been told by the state that we can't have it, but we will resume, and it's still in your best interest to pay. Here is what you owe. So I think we've sent out 3 separate letters to the folks that were still in the sale. What we would do now is we would start over because it's been so long. And we would look at our current collections as well, because this will probably be after all of this is over. And we'll look and see what is out there from this collection that is a high dollar amount account. Those would be included in the sale as well, because in most of those cases, if you, for example, have a taxpayer and their tax bill is $63,000 a year, you don't want that to go delinquent very long. So we're going to put that in the sale. And in most cases, that property has a mortgage. Their mortgage lender will be notified by us that the sale is happening. And the taxpayer will be in default of their mortgage by letting their taxes go, because now the mortgage company is at risk because the tax lien supersedes their mortgage lien. So they will step in and they will pay us. We don't care where we get the money from, if it's the taxpayer or the mortgage company. We just want our taxes. So we will accept the payment. The property will be removed from the sale. That happens frequently when we have taxpayers in the sale where it's a relatively recent delinquency, but a very high dollar amount delinquency. So that's the kind of stuff we would be adding to the sale. The ones that were already in it, they're 3 or more years back, or very close to the threshold anyway. So we told them, look, by the time the sale rolls around, you're going to have another couple payments due. You're probably going to be in the sale. I hope that answers your question. It's kind
very
of
much
hard.
so. No, thank you. That was answered very well. To go back just a second to the sort of the tax collection where we're at right now. We're really not going to get a clear picture until we get to our October meeting, and you're able to look at, and even into November when we, calculate based on what you receive in October, a clear picture of where we're at based on the COVID at this point.
Yes, that's
Correct.
exactly right. Because if October 1st is the last day, and we're going to really publicize the living daylights out of it because people are going to forget. So October 1st, say you get a lot of people pay on October 1st, it's going to take us a week to process that mail. So that isn't going to show up until the end of October report. So you're absolutely right. But in the meantime, we don't want to just twiddle our thumbs. So we're looking basically every week. We're tracking our collections every week against what we did last July, pre-COVID. And some weeks are up and some weeks are down. It's really hard to tell, but we're just trying to figure out what else we might be able to do to try to keep this all moving.
David,
And
could
maybe
I-
Henry wants to
I
speak
think
to
you're
that.
I think you're doing a phenomenal job keeping it moving. I think the concern that I have is looking forward, and this goes into, a discussion, on a larger level of looking at what's happening right now, whether we're going to get money from the state, from the Fed as we move forward. Whether we're going to get hit with COVID related expenses, or even, we look at Board of Ed expenses based on reopening for COVID. I'm looking at the concern and concerned of the numbers as I look at being down from last year. And so I'm just sort of weighing it out, Henry. That's all.
This is Henry Dackwith, CFO. Couple of points I'd like to make. Lisa informed me that this is common practice here. Once we send out tax sale notices, people come in and pay. So it's not like this year is a different phenomenon. I just went before our bond rating agencies and I said we had the best of both worlds. We sent out the letters, we collected a lot of the money, but we didn't have to have the expense of the sale. It's sort of like the threat without carrying it out. We normally carry it out. So the second thing I want to talk about is the budget. When we calculate our budget, we know that we have back taxes that we are going to collect every year. And we know when it's a tax sale year, we expect more. So the 98.6% is on that larger amount. And it's a blended, that's what we think we can do. I think historically we've been a little bit spoiled because we've exceeded 98.6. We've come in at the high 98s, low 99s. They're all very good numbers. But again, we do conservative budgeting. We think we know what the patterns are, both on the revenue side as well as the expense side. So it doesn't surprise me. We're a little bit above 98.6. It's a tough year. It's COVID. But I expect some more money coming in August as well. Going forward, I'll make the point on a big global point. In 2008 and 9, when we had the recession with housing, banks had lent 80, 90, 95% of market value. The house only had to go down 5% and they were underwater. Our tax bills are 23 mils of 70% of fair market value. If you do the math, the price of a house has to go down by over 95% before we have a problem. That's number one. So we're not at great risk. Number two, I've worked with both companies and individuals who are under financial pressure. And there's some cash available and they have a whole bunch of debts. And the question is, as you sit there, which bills do you pay? Now, for most people, their house is their biggest asset. They don't want us to seize the house and sell it. We get the payments, okay? Banks who have a mortgage do not want to fool around with a government lien that has priority over theirs. So we will get the money. To me, it's just a question of short-term or long-term, whether we'll get it at a tax sale or we'll get it through. Now, we're very sensitive to the community. These are tough times. People are having trouble. That's why we deferred and extended the grace period. That's why we try to accommodate, and we work very hard to keep our mill rate increase as low as possible. But having said that, we've got to stay operational no matter what happens. Now, regarding finances, if you recall, we were finished with about 90% of our budget before COVID hit. And when we came back, we had a little bit of time, and we ended up putting some more money as a buffer in next year's budget. So one of the things we did is we dropped the collection rate estimate to 97.6%. I really think we may end up with the 98.6, but that gets me a $3.5 million buffer for other revenue shortfall or for other expenses unknown. We also had that unexpected one-time event where the Sono Mall, it has a 7-year abatement period where they only pay us 50%, but because they didn't get their certificate of occupancy, we ended up getting the full tax rate this coming year, and it was just right in the nick of time. So we used a lot of those funds to buffer next year's budget. So we think we're okay for the 2020 budget year. We're accumulating all of the costs of COVID, whether it's revenue shortfall or unexpected, unanticipated expenses. We are submitting them to FEMA, and to the state has their coronavirus reimbursement fund. So we're going to maximize what we can get. We're watching revenues and expenses like a hawk. Lisa prepares for me. I get it every Monday morning on my desk, week by week, collection comparison of this year versus last year. The problem is, since last year the bills were due August 1st, we can't make a meaningful comparison because if people aren't paying this year, it could be because they have a grace period. So you're right. I expect that in October, we'll start seeing the meaningful comparisons, but we feel pretty good that we're protected and we think that we'll be okay.
Where are we at right now when you look at COVID expenses uh, uh, compared to and what you're able to apply for grant money against that? I mean, do we have an accounting of that yet?
We had a split that we were asked to prepare for the state and which we have updated. We split it Board of Ed and the city, and we split it revenue shortfall versus expenses that were unanticipated. So for the city, the revenue shortfall is usually Parks and Rec because we're not getting those fees, or building inspectors that aren't being able to go out and inspect. For the Board of Ed, their revenue shortfall seems to be meals, lunches, money. So that's a number. On the expenses, on the city side, we have primarily cleaning expenditures and overtime for police. For the Board of Ed, the vast majority of their extra expenses were all those technology expenses for distance learning. We've submitted these numbers. It's a patchwork. Some of them are submitted by the Board of Ed to the State Board of Ed. They've gotten some reimbursement for the technology expenditures. So we're working the system and the process. Yet what may occur is we may have a shortfall hit in fiscal year 2020, and we pick up the reimbursement in fiscal year 2021. So that's an interesting phenomenon just because of where year end occurs. And I think that's another buffer for us, that although we had the hit in this past year, we may end up getting reimbursements in the following year. We don't set up an accrual or on a modified cash basis. So therefore, when the cash comes in, we'll recognize it. So that's another buffer. So we have all of these little pockets trying to buffer us. We're watching. And then this is just the financial side. On the operational side, we're also looking at certain activities to try to scale our expenditures appropriately if things take a turn for the worse.
Thank you. Very detailed from both of you. I appreciate it.
Welcome. Hope I answered the questions.
Henry, Greg Burnett, just a question. In that same vein, are we taking a second look at our capital expenses in terms of what project, you smile, what projects we might be able to delay just to ensure we don't run short of, I'll say, cash?
The very short answer is yes. We are pricing a bond deal next Tuesday. I've gotten word today, all three rating agencies have reaffirmed their AAA rating.
Excellent.
And the bond markets are very cooperative. Even the long-term rates are dropping down. So we may get lucky, but these are going to be definitely the lowest rates we've ever borrowed historically. I've mentioned in the past, the financial advisor and I have looked at the maximum amount of debt that we can handle before we start jeopardizing the AAA rating. There's another key ratio that I'm looking at a little bit more carefully now, which is our debt service as a comparison to the operating budget. And we're getting close. According to our own policies, debt service should not be more than 10% of our operating budget. And I think we're bumping up against 9%. And that's with record low interest rates. So we're trying to balance that. And I am working with the mayor, looking at all the capital projects, and we are focusing on that. I don't think we have any danger right now this fiscal year, but it's sort of early warning. I'd like to take a closer look at that, especially as we go through next year's capital budget, to make sure that we don't have any problems in the future.
Great. Excellent. And just one final question to Lisa. When we look at this report, we're not comparing the three. Are we? Well, let me phrase it this way: are we comparing the 328 million against the 333? or are those just two totally different numbers?
You're talking about the spreadsheet?
I'm talking about in the narrative on the second sentence where we state we collected in excess of 328 million.
Okay, in that sentence, if I can try to answer, that is the 36.7% is the current collection on the 2019 grand list, the brand new taxes that we're
Right.
collecting in June and July. So that levy is $350 million just for taxes. And then I'm talking about the 328 million is last year's levy. So we're at 98.63% with a 13-month fiscal year that started last July 1st of 2019 and ran through July 31st of 2020. So 13 months. That was a lower levy. That was only $333 million. And that's the true levy that is adjusted, because I'm always giving you real figures, because to be honest with you, that levy goes up and down every month because there's adjustments. There's bills that are adjusted and we're not entitled to the money any longer. We've got refunds going back to people. There's new assessments that are added. So the grand list goes up and sometimes it goes down. So every month I'm giving you on that spreadsheet what we call a corrected levy, which is the actual levy that we are due at that particular moment in time. So we figure that's a more accurate figure of what we should be measuring our collection against. So every month when I give you these figures in the narrative, those are the figures that I'm giving you. I hope I explained that okay. But we're talking about two different levies, 2 different years. And there's 2 different spreadsheets for July, and you'll get 2 different spreadsheets for August. And then it won't matter any longer what we did on 2018. We'll be focusing solely on the 2019 grant list from that point forward.
Right. Thank you. But my question was comparing the 328 versus the 333.
Okay.
I
don't know.
Yeah, go ahead.
I don't know what I'm supposed to be comparing.
Oh, okay. So so my question is, are we comparing those two numbers, or we should not be comparing those two numbers?
Well, the levy went up because the budget went up. So we're raising more money in taxes this year, but those,
No,
Henry, help me out. I don't think I understand the question. I'm not a numbers person.
I think the point, let me try to put it in my words, okay? So when we do the budget, it's static. We come to the end of this grueling budget year and we say, how much revenue are we getting from the state, from our fees internally? How much do we need to collect in taxes? But then we have to add more because we have exemptions for elderly and other credits, and because we don't expect to collect all of it. We only expect to collect 98.6%. And then we say, okay, that's how much we need to collect from all of our tax bills. And then we divide through by the grand list, district by district, and we get our mill rates, okay? What I hear from Lisa for the first time is that, so the expected non-collection of taxes that we do in budget is a fixed number. It's 1.4% of what we are sending out in bills. And what Lisa is saying, it's dynamic. We keep moving every month because the BAA may have an adjustment. We may decide that we are not entitled to certain taxes. So she changes how much money she expects to collect in total that we're legally entitled to collect, and then compares the actual collections to that. But again, this should be small and minor on the edge. So to keep things simple, we just say, we expect to collect 98.6%. Things may go up, things may go down. What does that number look like? And Lisa is tweaking it a little, but the numbers really are changing. She's not keeping it constant on what the bills that were mailed out, because there are adjustments throughout the year. So it's a little bit of a moving target. It's so small, it's really not significant. So I think we're okay. You know, if the Sono Mall came in and it was determined they don't owe us anything, now we've got a serious issue. But I think if a certain house changed, they demonstrated that they didn't require this addition and all sorts of minor things like that, it's just not a big deal. So my sense is that they're two separate years. And if you just compare the collection rate year to year, that might be a good constant to try to make that comparison. Good?
Okay, thank you. Okay,
Lisa, when I interrupt you, this is what happens.
I welcome it because I didn't know how to answer the question. I apologize.
You're doing fine.
Okay.
okay. Did we have any other questions as it relates to the, hold on. As it relates to the narrative or the monthly tax collector's report? Seeing and hearing none, we will accept both of those items as information. There's no vote that's necessary on items 6 or 7. So thank you again, Lisa and Henry, for the fine work that you're doing, and we'll look forward to hopefully a strong August, September, October, and a positive report in November. Let's hope.
Absolutely. Yep. And everybody stay healthy.
Thank you.
Yes, thank you. That moves us to item 8, which is receive the report of Oak Hills Authority, and we have the President Chairman Carl Dickens on the call on the meeting tonight, and I will share his presentation. Hold on, let me bring it up. Okay, can everyone see the report?
Yes.
Okay, Carl, the floor is
All right.
yours.
Good. Well, good evening, everyone, and thanks for giving us this opportunity again to come and share with you what's going on at Oak Hills. And Henry, now that we have the budget in its form and we spent 3 hours on it the other night, we don't have the numbers to play around with, thank God, that you're looking at, but we're trying our best to put together a good budget going forward. And I apologize we're late, but one of the things that then we'll start working on is the meeting that we had with you, where we'll put stuff in a form that you want to see it, which I would like to see as well, with the cash flow and that sort of thing. So appreciate that. If you want to go to the next slide, Councilman Burnett, that'd be great. So demand for our product is still very high. We anticipate that it will stay that way through at least the end of this month. If we get good weather, September will probably stay strong as well. This has been one of those years where, for all of us, we haven't had a lot of rain, and so we did an actual tour this morning, starting at 7, dodging golf balls because we were out going opposite directions with Jim, the superintendent, and Paul Alexander, the pro. Which I will need your help on, Henry, when we get this done. There's a lot of things need to be done at Oak Hills that hasn't been done in the past, like when I say past 5 to 10 years. So we're putting together some really needed capital issues and capital expenditures that we'll need to do. Because of lack of rain this year, which is normally a good thing because that means rounds are up, we're having now to really start to use city water. And I think it's $633 per 50,000 or 10,000 guys, whatever it is. It's a bill that now we're gonna have to start paying for the water that we're using, but we have to do that. So that's just a little background of what's happening there. So the numbers I'm showing you tonight, as we've been doing, this is just since when we opened up back in May. And the revenue that we've generated thus far as of the 11th of this month is $1,036,869. The numbers that are up there that you see has come from the various sources that are listed up there. The 20,000 donation that helped us get started. Tennis, of course, at 25,000 for the lease of the tennis courts, which has also been extremely busy. And that's where the revenue has come from. Some of it is has been deferred, as you also. As of the 11th, also the cash balance in the bank is $233,000. Now, there's been some checks that you're going to see in a moment that has been written that'll bring that down. They just haven't cleared yet, but not by great numbers. Keep in mind that when we started back in May, that bank balance was $1,600. So things have moved in the right direction, thanks to everyone's help and thanks to a really terrific staff at Oak Hills with Jim and his team, and also with Paul coming on. And I have to also thank the patrons of Oak Hills who have been playing and spending their hard-earned money to play at the golf course and keeping it busy. The day it rained, I was actually on the course when the thunder and lightning started hitting. We were on the 8th green, and all of a sudden it was a parking lot down by the clubhouse because everybody came off the course as they should have. And it was really good to see because all the carts, which we only have 68, were all around the clubhouse. So tee times are full, carts are full, business is good right now. So yes, if you want to switch to the next slide now, Mr. Burnett, that'll help. So this was payments that we made this week. Eversource, we cut a check for $2,948. That's not the only Eversource bill we have. We have every piece of property, building, outlet, pumps, you name it, that we have at Oak Hills that get electricity, each has its own meter and it gets its own bill. So the bills that had accumulated that we needed to pay this month total to $2,948. You'll see the credit line. We paid that off last month, so we don't owe anything on the $200,000 credit line we had that we had to take out. And we're working like crazy to be able to have a cash reserve by the end of September, going into fall, October, November, where in the past we've had to sometime around November draw on that to pay payroll. We're not wanting to do that this year. We're working real hard not to do that. So things are going in the right direction there too. Next slide, please. So I'm really not happy. Normally people aren't happy to tell you they're paying a bill, but I am, and I mean it. That city debt repayment, you know, we started at $2 per round per month, and I'm happy to say, and it's not like the old saying, checks in the mail. Check is in the mail. I don't know if you've gotten it yet, but for $13,032, which is the $2 per round for the month of July that we have paid back, that it comes to about 6,000 something if you do the math, number of rounds for July. That 22.5% I have up there is an increase in rounds this July over last July. So that's a very positive thing. And it's coming from our current members and residents who have played the course a lot, but we've gotten an awful, in the business world, we're getting a lot of sampling. We have to turn that sampling into real customers going forward. And I think that we will, because as I mentioned this morning, we were doing a survey of the golf course. We got stopped at least 4 or 5 times of players who said, what a great job you guys are doing with this facility and how good it looks. So I think we've expanded the Oak Hills experience greatly throughout this metropolitan area. So the $41,767 is the remaining debt. The payroll, which is bi-weekly, coming up on the 14th, is $39,000. The total remaining debt outstanding, and if we all remember when we first started doing these reports in back in May, that number was almost $500,000. So we have paid down the debt to the $80,000, and also in there is $39,000 of that weekly number, which will always, or bi-weekly, which will always be there, but that $41,000 is other debt that we've had that we're paying down. Unfortunately, there are so many things that can demand money at the golf course. You'll see we had to pay $1,796 in HVAC repairs because of these 95-degree days and the dew point at 80% and humidity at 95%. The exchange and the PVC couldn't handle all of the water that the air conditioners were sucking out of the air. And we started having an overflow in the unit that's in the ladies' bathroom, and it was dripping through. So we had no choice but to call somebody to get that fixed. And then some miscellaneous stuff that you see there. So the total debt that we've paid off since the 9th has been $849,902, and that's those three items there. I think if you add those up, it's around $756,000. You add on the rest of the debt you see there. That's what we've been paying back. And I am very, very sincere when I say I'm happy that part of that debt is that $13,000 a month at the top. That'll change month to month now because of the number of rounds and as demand goes down. But that's the picture as we look at it on this, whatever today's date is, the 13th.
Great. Thank you so much, Carl.
welcome.
Are there any questions? Just one question I have is, as you closed your books at the end of June, have you started any discussion on auditing the fiscal year?
Yes, Mark is taking care of that. That started. As I mentioned, we spent, and Joe Androsco is now our new treasurer. We spent time with him and Denise Brown, our newest member, who also in her real job is in bookkeeping and accounting. So we've got some good number crunchers now, which we've always had, but now we've got people who do this full time. And then they always have me as a former type SVP and manager who comes in and asks really stupid questions, but the people that know what the numbers are come back and say, well, you can't do that. And so we're at it. But the budget preliminarily is done. We spent, as I mentioned, 3 hours on it the other night. We're projecting a low number right now for the new budget for about, I think it's $1,685,000 in revenue. That's up a couple $100,000 from what we project that we'll do this year. We think it's going to be about $1.5 million, maybe a little more, which is not bad. Again, that's from May to the end of the year. The problem is that we don't have a lot of revenue streams, so we've got to come up with some new ones to increase that, to put a little more distance between what our projected revenue is and what our expenses are. And most of our expenses are pretty fixed. I would tell all of us on this particular call, and we're on the record, and I would go on the record for this, unless you've got tons of money and people to back you while saying that you own a golf course might be really nice. It's really expensive to run a golf course. Very expensive. So that's it.
I just make a comment. I did sit with Carl and Dave and working through presentations that can be consistent and maybe more helpful going forward, and looking forward to that changes. But Carl, you hit upon a fundamental. It's a high fixed cost business, okay? So if you compare that to an airline or a hotel, you can only manage those expenses so far. It becomes, you try to drive the break even down as low as you can. And you've heard this, the occupancy rate at a hotel or how much is filled in an airplane. And what happens is when you're below the break even, you lose a lot of money, you hemorrhage. But when you're above that break even, you really make a lot of money.
Right.
That's the goal. So the point is you manage the expenses to get break even as low as possible. You look at your pricing so that you're getting good revenue per unit of demand, and then try to get those revenue streams. So it just seems to me, and I've only been involved for 15 months, that you're doing the right things. You're doing it step by step. COVID hit, that was negative. We had good weather this year, so we're getting good play. But hopefully over time, those dynamics work in our favor, and everybody will be in better shape.
Right. Yeah, I spent my whole career in yield management, and this is the storybook chapter of yield management, because once the 9:05 tee time goes by, if we don't have 4 golfers or somebody occupying that, which fortunately we've not had that issue, you can never recoup that revenue. It's gone.
Yeah.
It's gone. So.
Do you have any? You have any issues with social distancing? And
No, you know, like you have an occasion, but we have everybody wears masks and it's following the rules that you have to have the mask on until you're out on the golf course. A lot of people tried to say, well, it's hard to judge 6 feet apart when you're on the tee. Not really. Take your driver out, have your partner take your driver out and touch the heads together, and you're 6 feet apart. Pretty simple. And we had a few people that used to show up on the putting green, they didn't have a mask on and this sort of thing. And when the staff and other people would go to approach them, they would get sometimes a little testy. So we just went around that and we bought some masks. And when we see somebody that didn't have one on, we just go over and hand them the box and say, would you take one out? You really got to wear a mask while you're here on the course until you can start to play. If they take the mask and put it on, they're fine.
Councilmember Hooverman.
Just real quick, Carl, I appreciate that the packet this month had the P&L and the balance sheets in it, because that was helpful to look at that information that way. So I'm hoping that moving forward that we see those pages as well from this narrative, because it gives a clearer picture. But I'm very excited that Oak Hills is doing as well as it is right now, because it was, I know, a little touch and go in the spring, but this is a good picture going forward, and I feel good for you guys. Thank you.
Thank you for the comments. I appreciate it. And I thank all the council. We've had a lot of great support from everybody, and the mayor and Alicia and everyone. I can't tell you how much that's appreciated.
Great. Any other questions, additional questions for Oak Hills? Okay. Hearing and seeing none, we'll move on to the final item, which is motion to adjourn. Before I say that, Henry, do you have any closing comments?
No, thank you.
Okay. All right.
I'm very pleased to report these are the dog days of summer. I appreciate all of your service on a Thursday night in the summer. You're all here focusing on city business. I'll tell you, for the employees and staff, knowing we have that support from all the council members from the BET, it really means a lot, as Carl said, because we're slogging away every day trying to do the right thing, but sometimes we need your guidance and advice, and we appreciate all the service you give.
Great. Thank you. Much appreciated. So with that, do we have a motion to adjourn? Councilmember Keegan has made that motion. Quick roll call vote on that. Councilmember Hooverman.
Aye.
Councilmember Keegan.
Yes.
Councilmember Sacchinelli.
Aye.
Councilmember Kaitis.
Yes.
Councilmember Theodoritis.
Yes.
And Councilmember Burnett is an aye. So we are adjourned at 8:00 p.m. Everyone enjoy the rest of your evening and stay safe.
Have a
Stay
good
safe.
weekend.
Good night, everybody.
Good night, everyone.
Safe.
Good night, everyone.
Thank you very much.